All right, everybody, welcome to the Discover Vancouver channel. I'm Doug, and today we have the privilege of talking with Trevor Bonnet. He's a mortgage broker extraordinaire with Guild Mortgage. He's a great guy. I work with him professionally. I also am a customer, so I like to eat what I cook. And so I want to welcome Trevor on the show today, and thanks so much for being with us.
Yeah,
Appreciate that.
absolutely, Doug. Thank you so much. I feel super special to be a part of this, and really been looking forward to it.
Yeah, well, everyone's talking about rates. Everyone's talking about the Fed. You always hear it in the news. It's such a trendy kind of topic, and for good reason. I guess my first question is, how did you get into being a mortgage broker? And can you tell us a little bit about your journey and how you came to do that?
Yeah, absolutely. So it's kind of interesting because lately I've been the most popular guy at the barbecue, so to speak. Everybody's been asking me about those rates. Everybody who's even somewhat interested in the housing market, whether they own a home, want to own a home, and I think that's the vast majority of everyone I talk to. They want to corner me and just pick my brain about what's going on. So I love that you have a platform where we can kind of discuss this. As far as my journey goes, yeah, I did not grow up thinking let's be a mortgage lender or mortgage broker. That was never in the cards for me. I wanted, growing up, I had a great dad, and I wanted to be a great dad. And then when I found out you couldn't get paid doing that, I thought, well, I'm good at sales, so I got into sales. And then I started looking at avenues for flexible work jobs. So things that, I could work in the office, I could work from home, things that would allow me to, have a good work-life balance, and still be a present father, not just physically, but there emotionally as well.
Yeah.
And so, interestingly enough, I was actually selling gravel in North Dakota. And then I came home, started selling jewelry and landscape material locally here in Camas,
Huh.
Washington. And I was looking for a way out. Great gigs I had at the time, but I just wasn't feeling fulfilled. And somebody I knew had mentioned that this mortgage company was looking for just a front desk admin. And so I interviewed. They loved what I, had to say. They gave me the job. And then 3 months later, somebody picked me up and plopped me on their team. And there's been no looking back since. I've been a mortgage lender now for, almost 7 years now in October. So we're, I think, at 6.5.
Wow. Yeah, that's super cool. And I really appreciate how you like made the time to be a good dad and prioritize that. I do want to hear your pitch for gravel.
I don't have a
I,
I
I
don't
just
have
can't
a good
imagine
one.
selling
Yeah.
gravel.
I
How
don't
do you sell gravel?
Yeah, so the only reason that was even a market over there was because, here in the Pacific Northwest, I'm sure anybody who's watching or listening to this, you can't dig a hole in your backyard without hitting a rock. Well, North Dakota is not that way at all. And so the infrastructure is in such high demand at that time for the boom that was going on in the oil fields that they needed rock and gravel so that they could like lay pads for the oil rigs so that they could make
Huh,
roads. So I didn't really have to sell it. It was more like this is the product, and then they would come and pick it up by the truckload.
right. Gravel sells itself. I guess if you need gravel, that's you know where to get it. You got gravel. You don't even need to sell it.
Right, exactly
Uh,
that.
well, it's easier to sell a mortgage, I think. Or you can tell me what are you seeing in general with trends with mortgages these days? Are more people, do you see an uptick in people applying for mortgages and kind of what's the general environment like in the mortgage industry?
Yeah, so I think interestingly enough, rates are still high considering what we saw during COVID. And obviously, COVID was a fluke or a freak thing that we'll probably never
Black
see.
Swan.
Yeah, we'll probably never see in my career ever again. I mean, we're talking 30-year fixed rate mortgages in the mid to low twos for some people. Don't count on that if you're listening to this. Nobody
Right.
anticipates that that's happening again. But what we are seeing is, yeah, there's an uptick in people trying to buy houses still, even with rates where they're at. There's such a supply and demand issue that
Yeah.
home values in this area specifically, they're maintaining. There's still 5 to 6 people for every home on the market that want to buy. And that's at
Yeah.
not even a competitive price point. There's some price points where you're having 10 offers come in and more.
Mhm.
And so yeah, it's it's an interesting aspect because rates are still high, property values are still high, that people are still out there, meaning there are people out there that want to buy, and they're not crazy. They want home ownership, and
Right.
I think they understand that, we're on the curve, right? Like we can see the turn. We all anticipate that R word, recession, coming, and at that point we might be able to capitalize on the refinance, and you don't got to compete for a refinance. You already own the home. At that point it's all just bonus, right? You're just lowering that payment.
Right. That's a good point because when we did have those super low interest rates that drove prices up. And so people, although they had a low interest rate, had to put like these crazy offers, above asking.
Mm-hmm.
And so, I think people focus on those high rates, but they're kind of missing the point. Like, well, when rates are a little higher, that might take some people out and the housing market becomes a little less competitive. Although, houses are still going at a good clip.
Mm-hmm.
What I've seen is if it's priced right, it's going pretty quick. And I'm seeing days on market for a lot of these places as like under a week. Okay. I'm seeing these places, especially in that first time home buyer market where it might be around, the median home price in Vancouver. So kind of the upper fours, those places are just going at a
Mm-hmm.
great clip and you're seeing, high offers on those. So
Yeah,
yeah,
no,
I
that's
guess if
100% right.
yeah. So, yeah, it's weird because you mentioned the R word and you hear that a lot, on the news and stuff. And I guess if I'm, looking to buy a home and I'm getting different messages because we're kind of talking about how mortgages are, a lot of people are applying and the housing market's kind of moving along at a healthy clip. But you're hearing all this news about, financial ruin and bank collapse and kind of all this negativity. And I want to honor, there's always a possibility that these things happen. We don't
Mm-hmm.
predict the future, but everything that we're kind of seeing from the mortgage end and the real estate end indicates like a healthy housing market. So yeah, just wondering what your thoughts are kind of on that disparity. Like if I'm sitting on the fence, like I know what do you say to someone like me who's hearing two things that don't sync up?
Yeah, I mean, 100%. So, everybody is an expert in the housing market, is, what we kind of like to say. There's several things. I always tell people, like, if you're talking to the guy at the bar on whether it's a good time to buy a house or not, and he doesn't own a home or he bought a house 30 years ago, probably not the guy to be talking to, right? Like, you want to make sure you're talking to
Right.
real estate agents who are working today in this market, and mortgage professionals who are working today in this market, because it's completely turned on its head in the last 2 years. There's a lot of fear out there. I'm a millennial, and there's memes and there's jokes out there about how we've survived now three economic downturns, a global pandemic, multiple wars, conflict with Russia now. Like there's all these things that we're all going, oh God, this is just kind of the new normal. Well, at the same time, the market today is completely different, and I think it's a touching point for us. In 2008, I was in high school, right? And I saw the impact that had. My parents didn't lose their home, but I had several friends who had parents lose their home, and
Yeah.
it's tough now that we remember that. The millennials are the largest buying population in the United States ever, and the way they measure that is, I think, 28 to 32. So in that 4 year gap of age, there's more people that have ever bought, more than the baby boomers, more than that. That being said, we have a housing shortage, and that we can go into that maybe a little bit later on the impact of '08,
Sure.
2010 on why we have a housing shortage. But it's a completely different market. It's still a great time to buy if you have the means to do so. It doesn't mean it's a great time to buy for everyone, but it is a great time to buy if you can make it work. And there's a lot of fear out there. There's a lot of talks about, I mean, the B word, right? Bubble. Everyone wants to talk about the bubble. Well, we're not in a bubble. And if you want, I can go in a little bit deeper, maybe later on a different conversation. But there's several different indicators of why the market's healthy. The equity position of the national homeowner is crazy. More people have equity in their home now than they've ever had before, which is an asset or a tool that they can use, which is why we're not going to see an uptick in foreclosures. Because if you are upside down, or if you're not going to be able to make your mortgage payment because you lose your job, most people are sitting on an average of $80,000 in equity. What could you do with that if you sold your home, right? Pay off all your debt, start fresh, be clear, and not have to file for bankruptcy or foreclosure.
Right, or port it towards another home. And I
Right.
like the point you brought up of like millennials are coming online. They're in the process of buying homes, and then you also have Gen Z that's starting to come
Yep.
up. So again, it's like that simple supply and demand, and the professionals that are on the ground are seeing, and that's what we're dealing is sort of the reality of like mortgage, people applying for mortgages and people looking for homes and the clip at which homes are selling. We're just not seeing that you know, uh, behavior that would indicate a recession or a housing, crash or anything like that. I'm
Right.
just not seeing that in the day to day. And yeah, and when you think about it's just simple supply and demand, like we don't have enough housing. We have a lot of people that want housing, and so that drives the price, that keeps the prices stable or and drives them up. And as far as like the 2008, and I've done a video on this before. I bought my first property in 2007.
Right.
So like the worst time to buy real estate. And I held on to it. And, by the time I sold it, I did incredibly well. And I think that's a testament to another factor that people don't think about is that real estate's a pretty forgiving asset class over time.
Yep.
It tends to appreciate over time. And if you have a longer time horizon, and most of the people that are looking to live in their home and it's a place where they can grow a family and they're living there, then it's a very forgiving asset class, and so you can come out okay even if there's these dips, and that wasn't a dip, that was a huge crash.
Yeah.
So it's incredibly resilient, real estate is. So I think that's another factor that people tend to overlook or don't fully consider.
Yeah.
um, but
Uh,
but if I am, oh, I'm sorry, go ahead.
well, I was gonna say, we have market analysts here at Guild Mortgage that we keep. They work for Guild. His name is David Batney, and he's way smarter when it comes to this kind of stuff for me. So a lot of this information I actually just got straight from him, and he is a huge asset. So I'm super privileged to work for the company that I do. But he and just about every economist that I'm listening to, because I do keep up on what's going on, not just in the market but the economy, is because I need to know what factors are going to affect my job, because everything is so fluid when it comes to things. They're all saying that once we hit that recession, it's going to be soft and shallow. It's going to be quick, and it's not going to go deep, right? There's people people aren't going to be losing their jobs at the exodus that we saw back in 2008, 2010. It's just not necessary. I mean, the jobs report just came out, I think, yesterday, and unemployment is still holding strong. Like, we still have a very tight, strong job market, which is actually putting pressures on the inflation, right? Which is something that can affect the Fed's raising rates again. So there's all this information out there that I'm listening to so that I can advise my clients. Is today a good day to lock? Is today a good day for you to buy? Should you wait 6 months? Should you jump in now before the waters shift? And so I think that's
Right.
what's so important about working with a local real estate agent like yourself, who's up to date on not what the news is telling us, but what the numbers are telling us. And I think that's the important part, because if you're waiting for the news to tell you if it's an okay time to buy, you're going to be behind by probably 3 months. I joke that I
Or you
saw,
might just never buy, it's the
yeah,
news, it's always always
yeah,
something
it's
negative.
so negative. But I was joking
Yeah.
because Guild Mortgage, we launched this program, called the temporary buy down, or the lender paid buy down, where we're essentially paying your interest rate lower for the first year or possibly 2 years, depending on the type of credit we can get or the seller can provide. And this was a huge program that helped buyers avoid, and we still offer it today. It helps buyers avoid payment shock, right? You have these buyers that they're renting for 15, 16, $2,000, let's say. And then they're going, oh, okay, well, the payment's going to be 2,800. I can't afford that. And I said, okay, well, what if your first year or the first 2 years, your payment's lower and it's actually 2,200, 2,600? Can you stomach that a little bit better? Anticipating that rate, that recession, and that opportunity to refinance. And most people go, yeah, that makes sense. Like, I understand where rates are at and things like that. So we launched that a while ago. 3 months into doing that program and helping several home buyers utilize that program, the news came out and said it. And all of a sudden my phone starts ringing off the hook. Well, by that time, the market had shifted. Sellers are no
Right.
longer offering credits at that time.
Yeah.
They're saying this is an amazing product and you should be, if your lender's not doing this, well, it wasn't a viable option by the time somebody waited for the Today Show to bring it up.
Right. And I think that just emphasizes the importance of like getting in touch with professionals be like well before you begin looking for properties.
Yes.
And because really, both of us are resources for people first and foremost.
Yeah.
So we provide information, like you said, that's up to date and that's current and that's going to help people make a decision. And I think the earlier you can get in touch with someone like me or yourself, to just get a lay of the land, get an overview of your financial situation and what you're looking for, so you can plan and you can learn about some of these products. You guys have a lot of great products, and maybe we can get into that a little bit. But the importance of just starting early, I think,
Yeah.
is really important. But if I am, if I am a first time home buyer, someone who's looking to buy, I am, obviously higher rates than what we're used to play an important role. And it's not a small thing. I mean, I don't mean to like, make light of rates being high, because they do impact that monthly payment. And so if I'm someone who's looking to jump into the market, what are some general tools or tips and tricks that could kind of mitigate that higher payment?
Yeah, so I mean that lender paid buy down is a great example of one. There's times where we talk about aggressive rate buy downs. I let the numbers do the talking, right? So I want to make sure that I'm always advising my clients based off, here's the information I have, here's what we're anticipating happening in the near distant, however long future. And for that reason, we don't want to recommend refinancing, or we don't want to recommend aggressively buying down the rate if we're going to refinance later down the road, kind of a situation. But there's
Right.
several opportunities. There's tricks to do things like, um, you know get a seller credit. In certain markets that is still available, get a seller credit and do an aggressive rate buy down at the cost of the seller. We can do, instead of putting 20% down, you can do 15% down. And then we can look at maybe a lump sum MI premium. So now you're saving, roughly 5% of your down payment that you can apply towards a aggressive rate buy down, where you're going to buy the rate down so low that you won't even want to refinance in 6 to 9 months when rates come down, because your rate's going to be better than where that rate is. And you're still saving money. Your total out of
Right.
pocket expense is way lower. So yeah, there's several.
Yeah. And there's a break even point.
Yeah, there's several strategies. It's a case by case basis. The thing to remember, and I think what you brought up,
Yeah.
is we're an asset. I'm in a sales position according to my employer, but I'm really here to service,
Sure.
right? Like, I don't get paid differently if you go with a different program, or if you go with a more expensive interest rate. My goal is to get your costs as low as possible and your monthly payment as low as possible, and to tell you how to do that. So really, it's more about being an advisor and being a service, member to the client, and much like yourself.
Yeah. Just to expand on the services you do provide, I know that there are some people that have like they're trying to repair their
Mm-hmm.
credit as part of that process to get ready to purchase. And I know that you have some great resources
Yeah.
on, how to do that, which is incredible because these are one of those things like you start Googling, it's like healthcare, if
Yep.
you get a cough and you start Googling cough, and then all of a
You're
sudden you
dying.
have some terrible
Yeah.
disease, right? You have a terrible disease, where a phone call to someone like you could help them in that process of like repairing their credit and really prepare for that next step. And that's something you also offer, I know too. So
Yeah.
that's great.
I actually have a success story on that. So I had a client come to me back in December, and without, names, obviously. But they came to
Yeah.
me, and Doug, they had a 532 credit score, which doesn't qualify, right? And there's no judgment on that. But by them listening to me and utilizing the tools that I have, I was able to get their scores qualifying within 2 months. And then they were out writing
Wow.
offers on properties. They just closed on a house. First time home buyers just closed on a house on Monday. And they were amazing to work with. They were awesome. And the client at the time had said, like, you're gonna see some stuff on my credit. Here's the story. I was 18. I took out some debt. I didn't pay it back. You reap what you sow. I have to make amends on that. But
Right.
ultimately I need to buy a house for my family. Can you help me or not? And I said, absolutely. and they're homeowners
That's
now. Yeah,
incredible.
they're homeowners. I'm getting
Yeah.
goosebumps just talking about it because they were really amazing people. And I'm gonna
Yeah.
say they did the work. I told them how to do
Yeah.
it, but they did it, right? And so it was
Right.
truly amazing to work with them and to see the things that I talk about. I get on my soapbox and I preach what I can do and how to do it. And when it came time to test it, it worked and it was amazing.
That is amazing. And, a lot of people, including myself, like first starting out, did not realize that that was even something that a lender would be willing to do, or
Mhm.
that was even a service. When I think about, uh, when I first got into the business and buying real estate and selling real estate, it's, you get pigeonholed, like you're the guy that just does the
Right.
mortgage, but it's like, oh no, it's such a wealth of information, and to hear that you were able to do that in such a short amount of
Yeah.
time,
Well, and I want to
that's
be I want to
incredible.
be clear if there's an asterisk down here. I'm not a credit advisor, right? Like I
Right.
can't look at
Yeah.
your credit report and I can't, I'm not going to but I'm going to tell you how to do it, and the reason I'm able to do so is because Guild invests in technologies and softwares that allows me to bring the success to my clients. And so
Yeah.
that
Not financial advice.
nope,
Yeah. Right.
nope,
Right.
nope,
This is, we can help, but this just,
right.
just having to say that,
Right. But it's
yeah,
scary.
that's a great
Yeah, it's
service.
scary specific. Like, you pull the credit, and let's say you have a credit card on there and you owe $999 on it, and it'll say, "Hey Doug, pay that card down to $473." Right? Which is a weird number that nobody would ever pay it down to. And then it'll say, "Go get a letter from the creditor that states your updated balance." And then we'll actually supply a rapid rescore on your behalf, which will then allow you to, increase your score in a week rather than 30 to 45 days.
That's great. I actually, and things that you do when you're trying to repair your credit could actually kind of get in your
Yeah.
way. And just a recent example of myself, like I wanted to pay down some credit, so I did a balance transfer, but that maxed out another credit card, and that kind of lowered my
Yeah.
credit score by quite a
Yeah.
bit. And so even for someone like me who's maybe a little bit more literate than your average person, I forgot that that was a factor. And so just having you as a resource for that is incredible. And I probably should have called you
Well, yeah. Yeah.
before I did
Yeah,
that.
hindsight's 2020, right? So, but yeah, no, you
Oh
bring up
yeah,
a
of
great
course.
point. There's several things that make common sense when it comes to your credit that actually don't work. If you have a collection and
Yeah,
you think, "Man, I'm going to take care of that collection," that can actually have a negative impact in the short run, at least, on your credit because you're reopening up a closed derogatory account. So now you're opening up a new account, right? And you're not going to be able to do this. All right, it's gonna tank your credit for the short run before you start to see that immediate return on your pay down.
yeah. So just another reason to get in touch early, I
Yeah.
think. So that's a good point. And it doesn't cost anything.
No. No, we do. It's a
I
service. It's a
mean,
service
your
we
resource.
provide.
Yeah. And it's super valuable because it can save you a lot of time and
Yeah,
hassle.
and we do it. We don't just do
Um,
it for the credit challenged either. And I'm sure you want to move on to the next subject, but let's
no,
say
no.
let's say you have a 719 credit score. Well, if I can bump you up to a 720, you actually might get better pricing with rate and fees. So I'm going to look at that and I'm going to say, how much debt do you need to pay off to get there versus how much savings are you going to reflect? Does it make financial sense to do so? Maybe it does, maybe it doesn't. But at least you have someone in your corner that's looking at all aspects to see, I'm getting creative to save you money.
Yeah. And I appreciate that you explain it in a way that's, anyone can understand, because I find that, like, a lot of people will throw out a bunch of jargon and stuff,
Right.
and it's just, so I appreciate the way you explain things is really clear.
Yeah.
So I guess just in summary, we talked a little bit about the housing market and kind of what's going on with the amount of mortgage applications increasing, seeing houses go at a pretty brisk pace these days, and it seems to be picking up here as the summer
Yep.
progresses. And then yeah, and then just talking a little bit about the programs that are out there. And that there's a lot of flexibility in those buy downs. There's first time home buyer
Yep.
programs. There's a lot of ways to make it manageable for a first time home buyer or anyone who's looking to buy a home. And that I think really that the key is just that education component and getting and reaching out sooner rather than
Yeah.
later. Does that sound? Yeah.
That's a
Um,
100% right. Sometimes I have clients that they come to me and they go, my landlord just listed our rental for sale. I have 30 days to get out of here. Can we get it done? Yes, but does that add an extra layer of stress on all parties? Absolutely. If you're thinking about buying a home in September, start in June. You get
right.
work with a real estate agent and a lender to at least kind of draft out a plan, a first draft, so to speak, on what you would like to do. Because then that way, more times than not, you say, well, we're going to buy in September. And I go, well, here's your pre approval. And then a month later, a week later, 2 days later, they go, the house of our dreams popped up on the market.
Right. I see that. Yeah. Don't get stuck falling in love with a place when you don't have a pre-approval.
Exactly.
And right. And for the people watching out there and listening, Trevor and I are going to be at Ghost Runners Brewery Monday, June 5th to do a first time homebuyers info session where we'll go into more detail about this kind of stuff.
Yep.
So if you're interested, get in touch with me. I should have a link below. It's also on my Instagram and Facebook.
Yeah.
Is there anything you'd like people to know, or anything that I've we might not have covered that you'd like people to know?
No, I think we've kind of done a good basis of covering our bases, so to speak. I don't have really any concerns about is now a good time to buy, and it's not my I want to be clear whether you reach out to us after this video or if you come meet up with us on June 5th. We're not going to sell you, right? It's not our job to tell you it's a good time to buy. We're going
No.
to evaluate. We're going to let you know your options. I just had a client I spoke to who's looking to sell her house and move, just because she doesn't really like the area she lives in, which is another great point where you need to work with a great real estate agent who's going to shoot you straight and tell you, hey, maybe these are some things you need to pay attention to in this area based off what you've told me. I don't know if you're going to enjoy living here, right? And then give it up to the consumer. But this gal felt blindsided. She had moved from the country, and she didn't really get a good grasp of where she was moving. But she's looking to sell and buy. Well, her interest rate right now is in the threes, and it's gonna
Yeah.
almost double. So I told her in that instance, you might make more sense for you to wait for rates to come down a little bit, and then from there, you can get maybe a little bit more bang for your buck when you're selling your home because there is going to be an uptick of buyers when rates come down.
Right.
And so you're going
Right.
to get more out of your
Yeah.
you're going to get more out of your sale, and you're going to have a more favorable term when you go to buy a house. And she was like, that makes sense. Thank you for being upfront and not trying to sell me on something. And so that's why you need to find someone you
it always,
trust.
yeah, and it's always, good practice to just be a straight
Yeah.
shooter and provide the information, let people make that decision. Because there are a lot of people sitting on those super low interest rates
Yeah.
that, might be, maybe they've had an addition to their family and they're looking to move, but they like have a 3% interest rate.
Right.
And so they're wondering when to do that. So great advice. I'll also have Trevor's information down linked below. And Trevor, just want to thank you so much for hopping on the channel and providing all your expertise. I
Yeah.
really appreciate it. And looking forward to seeing what comes next. I appreciate you.
Yeah, Doug, I can't stress it enough. Thank you so much for having me. I love getting out there and just having, whether it's your platform or anybody else's, but just having the opportunity to talk with people about what's going on in the market. So thank you for the opportunity. And then, anybody that's listening, hope you have a fun and safe Memorial Day weekend, and take some time to think about, the service members that, you know, cost their lives so that we can enjoy the things we're talking about today.
Good point. Yeah, thanks for everybody in past, present in the military. Thanks for your service. And we'll see you next time on Discover Vancouver, Washington.
Awesome, Doug.